It is a rainy Tuesday afternoon in Tampines. Marcus, 48, Senior Logistics Director, sits on a plastic chair in a crowded retail branch of DBS. He has been waiting 42 minutes to collect a simple cashier's order. Around him, babies are crying, queue tickets are crumpled in sweaty palms, and the digital number display on the wall moves at a crawl. He looks across the main banking hall toward a heavy frosted glass door near the back. Every 15 minutes, a bank officer in a tailored suit steps out, quietly calls a name, and escorts someone behind that door. No waiting ticket, no noise, no plastic chair. Inside that room is a world Marcus does not know exists yet. Next month, Marcus receives a lump sum payout from a company divestment and moves 350,000 Singapore dollars into his DBS account. The next time he visits the branch, he does not take a number. The glass door opens automatically. An officer greets him by name, serves him freshly brewed coffee in a ceramic cup, and processes his transfer in 4 minutes while saving him 2,800 Singapore dollars on an international foreign exchange transaction. Marcus thinks he has reached the top of the banking system. He is wrong. In Singapore, the bank you see on the high street is not the bank that exists for people with capital. There are 3 distinct wealth thresholds where banks completely discard their standard retail playbook and rewrite their rules for you. The first threshold gives you comfort and better interest rates. The second threshold crosses a legal boundary set by the Monetary Authority of Singapore that unlocks financial instruments retail investors are forbidden from touching. And the third threshold turns you from an individual customer into a private institution. Today, we break down all 3 wealth levels in Singapore, with exact numbers, real bank requirements, and the specific mechanics of how the relationship between you and your money changes at every step. Start with the first threshold, where the bank stops treating you as a cost and starts treating you as a priority. Linda is 52, HR director living in a 4-room HDB flat in Bishan. Over 18 years of paying down her mortgage and saving systematically, she accumulates 350,000 Singapore dollars in cash and liquid funds across 3 different savings accounts, earning 0.05%. She decides to consolidate those funds into OCBC. The moment her balance hits 350,000 Singapore dollars, her account status automatically upgrades to OCBC Premier Banking. This is level 1, priority banking. In Singapore, the threshold for priority banking depends entirely on whether you choose local banks or foreign institutions. The local Big 3, DBS Treasures, OCBC Premier Banking, and UOB Privilege Banking, set their minimum gate at exactly 350,000 Singapore dollars in assets under management, or AUM. Foreign banks operating in Singapore set their entry points lower to capture market share. Standard Chartered Priority Banking and HSBC Premier Singapore require 200,000 Singapore dollars. Citigold Singapore requires 250,000 Singapore dollars. To understand why your experience changes instantly at $350,000, you have to look at the bank's internal profit model. To a retail branch, a customer with $10,000 in a savings account is an operational expense. You use the counter, you draw cash from ATMs, you call customer support, and the bank earns almost nothing from holding your deposit under low interest rate environments. The moment you bring 350,000 Singapore dollars, you enter the bank's internal classification known as affluent mass. You are no longer a cost center, you are a source of fee revenue. The bank assigns a dedicated relationship manager, or RM, to your account. The RM's explicit mandate is to ensure your $350,000 never leaves their ecosystem. Here is what actually changes in your day-to-day financial life at this level. First, foreign exchange execution. Normal retail customers exchanging Singapore dollars for United States dollars, Australian dollars, or British pounds pay a retail currency spread of 1 to 2% hidden in the exchange rate. On a transaction of 50,000 United States dollars, a retail customer loses up to 1,000 Singapore dollars to the spread. At the priority banking tier, you gain access to live institutional treasury spreads. That same $50,000 currency trade costs you a fraction of the retail spread, keeping hundreds of dollars in your account every single time you move money abroad. Second, deposit yield upgrades. Banks frequently reserve promotional fixed deposit rates exclusively for priority clients. When a standard retail fixed deposit pays 2.1%, a priority tier client depositing fresh funds often receives 2.5 to 2.7%. On $350,000, that 0.5% yield differential represents an additional 1,750 Singapore dollars in pure annual interest for doing nothing differently. Third, mortgage pricing leverage. If Linda applies for a residential property loan for a condo or HDB resale flat, her priority status gives her access to preferential mortgage spreads. Banks offer her a lower margin above the prevailing Singapore Overnight Rate Average, or SORA. A reduction of 0.15% on a $1 million mortgage saves Linda 1,500 Singapore dollars every year in interest payments. Fourth, fee waivers and status privileges. All telegraphic transfer fees, checkbook fees, and fall below account charges are permanently waived. You receive invitation-only credit cards such as DBS Treasures Black Elite or OCBC Premier Voyage Card, featuring complimentary airport limousine transfers to Changi Airport, Dragon Pass or Priority Pass lounge access globally, and accelerated air mile accrual rates. Finally, banks pay upfront to recruit you. Local banks routinely offer welcome cash incentives between 800 and 5,000 Singapore dollars, simply for bringing $350,000 of fresh funds into their priority program. Linda's action is immediate. She consolidates her scattered $350,000 into one priority account, collects a $2,000 welcome bonus, locks in a higher fixed deposit rate, and route all her overseas currency exchanges through her dedicated RM. Priority banking feels like luxury because of the marble desks, free espresso, and dedicated service. But from the perspective of Singapore's financial regulator, nothing fundamental has changed. You are still classified as a retail customer. The bank is legally obligated to protect you. They must conduct mandatory risk profiling surveys, provide long product disclosure sheets, and restrict you from buying high-yield institutional assets. You are playing in the exact same sandbox as someone with $500, just with better seats and faster service. To leave the retail sandbox entirely, you must cross the second threshold. This is where the relationship between you, the bank, and the law transforms completely. Alvin is 46, managing director of a logistics firm in Jurong West. Over 20 years of disciplined investing in SGX equities, prudent CPF management, and business cash flow, Alvin's net liquid portfolio reaches 1,500,000 Singapore dollars. He receives a call from DBS, inviting him to join DBS Treasures Private Client. This is Level 2, high net worth and accredited investor status. The asset threshold for Level 2 across major Singapore banks is set at 1,500,000 Singapore dollars. DBS Treasures Private Client, OCBC Premier Private Client, Citigold Private Client, and Standard Chartered Priority Private all sit at this exact $1.5 million line. UOB Privilege Reserve sets its gate slightly higher at 2 million Singapore dollars. At $1,500,000, you cross the single most important regulatory boundary in Singapore finance, the accredited investor status under the Securities and Futures Act, governed by the Monetary Authority of Singapore, or MAS. To qualify legally as an accredited investor, or AI, in Singapore, an individual must meet at least one of three strict criteria set by MAS. First, net financial assets exceeding 1 million Singapore dollars, excluding primary residential property value. Second, net personal assets exceeding 2 million Singapore dollars, where your primary residence can contribute a maximum of 1 million Singapore dollars toward the calculation. Third, an annual income of not less than 300,000 Singapore dollars in the preceding 12 months. When Alvin signs the Accredited Investor Declaration form at DBS Treasures Private Client, a massive legal shift occurs. Under MAS regulations, banks handling retail investors face heavy compliance obligations. They cannot offer unlisted corporate bonds, private equity funds, or structured derivatives without extensive regulatory filings and investor protection warnings. When Alvin signs the AI declaration, he officially states to the regulator that he possesses sufficient financial sophistication and capital to absorb risk. The bank is legally released from retail suitability constraints. In return, the bank opens the door to institutional private markets, where banks make their highest returns. Here are the specific financial instruments unlocked exclusively at Level 2. First, wholesale corporate bonds. A retail investor buying corporate bonds on the SGX market can only purchase retail tranche bonds in small lots of 1,000 Singapore dollars, which offer modest yields. Accredited investors get direct access to the wholesale bond market, where institutional companies issue debt in minimum lot sizes of 250,000 Singapore dollars. These wholesale bonds pay yields between 5.5% and 7.5% annually from reputable multinational issuers and property giants. Second, private equity and private credit funds. Alvin can now allocate capital directly into global private equity giants such as Blackstone, KKR, and Carlyle, with minimum entry commitments of 100,000 United States dollars. He also gains access to private credit funds that provide direct senior loans to middle market corporations, generating steady net distributions of 8 to 12% per year. Third, structured notes and auto-callables. His private wealth manager can structure customized equity-linked notes yielding 10 to 15% annual coupon returns, backed by quality blue-chip stocks like DBS, Singtel, or Apple, providing downside buffer zones that protect capital unless markets fall by 30% or more. Fourth, and most powerfully, Lombard Financing, also known as portfolio margin or portfolio lending. This is the single biggest engine of wealth acceleration used by high net worth investors in Singapore. When Alvin places 1 million Singapore dollars worth of high-grade wholesale corporate bonds into his DBS Treasures private client account, the bank does not just hold them. The bank allows Alvin to pledge those bonds as collateral and borrow up to 70% of their value, 700,000 Singapore dollars, at a low floating rate based on SORA plus a small private credit margin, currently totaling around 3.6%. Alvin takes that $700,000 of borrowed capital at 3.6% and reinvests it into additional high-grade wholesale bonds yielding 6%. The net spread between the 6% yield and the 3.6% borrowing cost is 2.4%. On $700,000 of leverage, Alvin generates 16,800 Singapore dollars of pure additional annual income on top of his original portfolio yield, without depositing a single extra dollar of cash. This carry trade mechanism is legally restricted from standard retail clients. It is unlocked only when you cross the $1,500,000 threshold and qualify as an accredited investor. Alvin's action is precise. He opts into accredited investor status, constructs a core portfolio of wholesale corporate bonds paying 6%, utilizes a conservative 40% Lombard loan facility at 3.6%, and increases his annual passive cash flow from 90,000 Singapore dollars to 114,000 Singapore dollars per year, fully tax-free under Singapore's tax laws. At $1,500,000, you are no longer treated as a retail saver. You are treated as an institutional investor. You use leverage, wholesale bonds, and private equity to build net worth. Yet even at level 2, you are still operating within the private client division of a commercial bank. You are using products structured by the bank. There is one final threshold where you leave commercial banking entirely. At this level, the bank stops trying to sell you products and starts building bespoke financial structures to preserve your family legacy across generations. This is the summit of Singapore's banking hierarchy. Mr. Tan is 64, founder of a precision manufacturing firm in Woodlands. After 35 years of building his business, he sells his operating stake for 7 million Singapore dollars in cash. He receives a direct introduction to the senior leadership of Bank of Singapore. the dedicated private banking subsidiary of OCBC, as well as DBS Private Bank. This is Level 3, Ultra High Net Worth and Private Banking. The asset entry gate for Level 3 in Singapore starts at 5 million United States dollars, or approximately 6,700,000 Singapore dollars. DBS Private Bank enforces a strict entry threshold of 5 million United States dollars in liquid AUM. Bank of Singapore and UOB Private Bank require 5 million Singapore dollars to 5 million United States dollars, depending on the client profile. Top-tier Swiss private banking institutions operating in Singapore, such as UBS, Credit Suisse under UBS, JP Morgan Private Bank, and HSBC Private Bank, set their minimum entry thresholds between 5 million and 10 million United States dollars. At Level 3, you move out of standard banking units and enter Private Wealth Management, or PWM. At this level, the conversation is no longer about which stock to buy or what interest rate your deposit earns. When a client holds 7 million Singapore dollars, their primary concerns are tax efficiency, asset protection against foreign litigation or estate taxes, and passing wealth to children without destroying their work ethic. Here are the institutional structures and privileges unlocked exclusively at Level 3. First, single family offices and MAS tax exemption schemes. Under Section 130 and Section 13U, to establish a single family office in Singapore under the MAS Section 130 tax incentive scheme, the family must commit a minimum starting AUM of 10 million Singapore dollars at the time of application, with a commitment to reach 20 million Singapore dollars within 2 years. Under Section 13O, the family office establishes an investment fund structure that receives total permanent tax exemption on specified income and capital gains derived from investments. To maintain this status, the family office must employ at least 2 investment professionals, which can include family members, and invest at least 10% of its portfolio, or 10 million Singapore dollars, whichever is lower, into designated local Singapore assets, such as SGX-listed equities, local corporate bonds, or Singapore-licensed private equity funds. For ultra-wealthy families with 50 million Singapore dollars or more, MAS offers Section 13U, providing even broader global investment flexibility and institutional tax umbrella protections. Second, Variable Capital Company, or VCC structures. Singapore introduced the VCC corporate structure to allow private banking clients to create umbrella funds for their family assets. Under a VCC, Mr. Tan can separate different asset classes, commercial real estate, international equities, private debt, into distinct sub-funds under one single corporate entity, protecting each sub-fund's assets from liabilities in other sub-funds, while optimizing tax reporting globally. Third, direct investment banking access and co-investments. At Level 3, Mr. Tan does not buy retail funds. His private banker connects him directly to the bank's investment banking division. When a major commercial building in Central Business District is being refinanced, or a tech company is raising private funding, Mr. Tan gets invited to participate in co-investment opportunities alongside the bank's own balance sheet. Fourth, bespoke legacy trusts and structuring. Private banks build Singapore family trusts and offshore trust structures that shield family assets from global estate taxes, forced heirship legal claims, and marital disputes. These trusts allow Mr. Tan to specify exact disbursement schedules for his grandchildren over 50 years, while keeping the principal capital intact and protected from creditors. Fifth, institutional Lombard pricing and sovereign access. Because Mr. Tan holds $7 million, his borrowing costs drop to institutional levels. His Lombard loan spread over SORA is negotiated individually with the bank's treasury desk, allowing him to borrow tens of millions at near wholesale interbank borrowing costs. Finally, the red carpet lifestyle and sovereign mobility. At this level, your relationship manager is a managing director at the bank. You gain direct access to senior leadership, invitations to closed-door economic summits with world leaders, access to art advisory teams for acquiring fine art, aircraft financing desks for private jets, and direct advisory support for Singapore's Global Investor Programme, or GIP, which grants permanent residency to global business founders and investors. Mr. Tan's action is strategic. He establishes a variable capital company structure through Bank of Singapore, applies for the MAS Section 130 tax exemption scheme, hires his 32-year-old daughter as an investment professional within the family office, and transfers his $7 million into a diversified multi-asset portfolio protected permanently from income and capital gains taxes. When you look at Singapore's banking landscape from the outside, it appears to be a single system of branches, credit cards, and mobile apps. From the inside, it is three completely different financial worlds stacked on top of each other. At level 1, between 200,000 and 350,000 Singapore dollars, priority banking eliminates friction. You get dedicated service, live FX rates, fee waivers, and preferential deposit yields. The bank treats you as a valued customer. At level 2, at 1,500,000 Singapore dollars, high net worth status and accredited investor classification remove regulatory constraints. You gain access to wholesale corporate bonds paying 6%, private credit, structured notes, and Lombard leverage. The bank treats you as an institutional investor. At level 3, at 5 million United States dollars and above, private banking and family office structures transform your wealth. You utilize Section 13(0) tax exemptions, variable capital companies, family trusts, and direct investment banking access. The bank treats you as an enduring family institution. The mistake most people make in Singapore is assuming they must wait until level 3 to start optimizing their money. Marcus, sitting on that plastic chair in Tampines, started by consolidating his savings to hit level 1. He used the fee savings and higher yields to accelerate his capital growth. Today, he is building systematically toward $1,500,000 to unlock accredited investor status and portfolio leverage. The bank does not change its rules when you ask. It changes its rules when your numbers force them to. What is your current wealth threshold in Singapore? And which specific tool from these three levels are you planning to unlock next in your financial journey? Let me know in the comments below. If this breakdown gave you a clear picture of how banking actually works in Singapore, hit that like button and subscribe. Next, we will analyze whether using SRS contributions alongside CPF overflows can push a median salary past the accredited investor boundary before retirement.